So the idea behind this is that I want to actually show you guys how I personally set up my Thinkorswim platform. A lot of people do have questions on what indicators to use, what's the best way to use them, scanning for good swing plays. And just as a reminder, I typically am a swing trader. In more volatile environments, I do a lot of day trading. And a lot of the day trading I do are things I don't alert. By the time I get in it, type up the alert, send it out. Typically, it's already too late. So I don't alert a lot of day trades, except for sometimes in chat I'll post them. But my swing trades are all, I base all of my trading off of technical analysis. I'm not a big fundamental trader. I know a lot of people disagree with that, but that's just how I've always traded, and that's how I'm going to continue to trade. Just got a note, no audio. Can you guys not hear me? Okay, yeah, I know. I mean, I'm testing on my end here too. Audio does look like it is working, so I'm gonna just continue. Um, Seeing you might need to refresh, maybe try that, or go to the actual YouTube and see if that works. To see if the audio works that way. So I'm going to show you guys how I set this up. So I am going to start with a blank canvas. I'm going to put this on the 1 hour chart just so you guys can kind of see. Now, a basis of my trading, and again, this is different for a lot of people. So it depends on how you want to trade, what you're taught. This is just how I trade. The way that I trade is not going to be correct for everybody. The way that you trade is not going to be correct for everybody, and the way that some other person out on Facebook or Twitter trades is not going to be correct for everybody. So you really need to find your own groove, your own way of doing things, and basically find out what works well for you, what you're comfortable with, and you need to stick with it. There are a million different indicators out there and a million different things that people are going to tell you is the only thing you need, and it's the best thing in the world, and it's the golden goose. But stick with what you know, stick with what works, and that's the way to do it. When you keep changing the way that you're doing things, a lot of times you will start struggling with trading because you're trying new ways of going, and it doesn't work, and you get frustrated, and then mentally just not correct. And that's another thing I'm going to go over on a different training is the mental aspect of trading, because that is huge. But so I have here on, I have ES up because even though the market is closed, the future market is open. So we should be able to see a little bit of change while we're going through this. I can go into a smaller time frame. I typically only trade on a 30-minute, 1 hour, 4 hour, daily, and weekly charts. The 5 minute is too volatile for me for my swing trading. 10-minute, 15-minute is okay. I do sometimes look at those. You can see here, this is my actual setup that I trade when I'm doing a single trade. So I do have a 5-minute chart here. I have a 10-minute chart. I have a 15-minute chart. Yeah, I have a 30-minute chart. And then I have my tick, which we're going to talk about, my ADD, add, my skew, and then my VIX. Okay, so this is my actual setup that I use. Obviously on my screen it is a little bit bigger, but you can kind of get an idea of what I use to actually trade. So the foundation of my trading is always the 15 exponential moving average and the 50 simple moving average. I don't go much lower than 1550 because again it's a little bit too volatile, it moves a little bit too quick for my trading style. Because I'm not scalping, I'm typically not day trading. I want more of a medium term moving average than I do on a quick moving average. So I'm going to go ahead and set that up. So you can kind of see how it works. Again, I'm on the 15 minute, and you know what, I'm going to go on at least on the 1 hour here, because it is a little bit more medium term. So we're going to do exponential moving average. We're going to change this to the 15, and I like it. That's actually a pretty good color, but we'll just do that. I like to make these a little bit thicker, so I use a 2 on those. So there's the 15-day exponential moving average. I'm going to add in the simple moving average, which my simple, I use the 50. And on my simple, I typically do a red. Change the width to 2, because again, I like that a little bit thicker. So there you go. So there's my 15 EMA and my 50 SMA. So the foundation of my trading is that cross. I do not enter a trade without that cross first happening on either a 30-minute, 1 hour, 4 hour, daily, or weekly chart. And again, based on how I'm trading and the goal of each trade is what I pick on what time frame to use those. So again, here I'm on the 1 hour, here's the 15. So I actually wouldn't enter this trade. So we would have entered this trade on the 1 hour at 32.30.88. So you would have actually ridden this trade all the way up just by using these moving averages up to the 33.20 area. So you would have actually had a 100-point gain just by using nothing but these moving averages. Now, this doesn't work 100% every time. You can see here when you dip down. So earlier before, you would have actually been in a buy, you would have bought, sold. And then when you would have sold here, so you would have sold anywhere between 32.23 and 32.17, and then you would have been chopped up and lost there. But then if you would have went long again, you could have followed that all the way up. So this is the basis foundation of my trading. I think everybody needs to find a good foundation. Everybody needs to find out what works for them. And again, stick with that. So this is what I've always used. This is something that will never change for me. If this works for you, great. If it doesn't work for you, find out what works for you. But you can see here, even on the daily chart, the same thing kind of works. So, starting in January a year ago, you would have been in at 26.12, ridden that up. You would have gotten out at 28.74. You would have been short, but then you would have been chopped up, back up. You would have made a little bit there, and then ridden that back up. So again, this is the foundation. Now, what I also do use, now this is a proprietary indicator for me, and what I would need to do to let anybody else use this would be talk to the person who built it and see if this is something that we can that I can share. Let me see its strategies. So what this does is this actually will give me a 15 exponential, 50 simple, and this will actually tell me each time it crosses. And then also we'll give you a stop loss, target profit. So if I want to make 25%, if I want to stop out at 70% or at 7%, this will tell me everything. But when I put this on here, you can see entry, exit, entry, exit, entry, and then we're still in an entry based on just this. Okay. When I'm on the daily chart, I also like to use the 200-day moving average. That's a major moving average that many on Wall Street use. So I'm going to put that on here. This one I just use a simple. And on my 200, I use a white. And then there's your 200-day moving average. So many people say that if a stock is above a 200-day moving average, it's always a buy. If it goes below the 200-day moving average, it's always a sell. So there are a lot of people who use nothing but the 200-day moving average. Again, I'm more of an active trader than that. As a passive trader or a passive investor, I think that's a great thing. If it crosses above the 200, you buy it. If it crosses below, you sell it. Wait till it crosses back up and you can buy it again. It's a great idea for people who don't want to have to watch everything. Is obviously you're going to see a lot of more volatility up and down, and your profit is going to move in and out. But if you just want to have something sitting there, you can actually set an alert to say once it crosses below the 200, you can go ahead and sell that. And with that said, let me actually show you a cool thing here with Thinkorswim. So I want to make sure I have auto send off. I don't want to buy this right now. But if you go buy market, we're going to go edit. Right here is a settings button. If you click this settings button, this little gear icon, this will come up. So with Thinkorswim, what you can do is go into the settings. Click down here, your symbol that you have up here is going to turn up. You go to study, edit. We're going to delete this one. You go to add condition, study. You go to moving average crossover. So right here, I can set this up. Obviously not on the futures ES because it's already above. But right here, you can set it up to buy or sell below or above that crossover. So if this, let's just say we want to do above within 1 day, and obviously I'm not going to turn this in. So on the daily, or if you want to do hourly or 30-minute, however you want to do it, you can actually set this up so that Thinkorswim will actually purchase this when that crossover happens. Now you do have to then go back and edit. This is not an automatic trading because once that's in, then you have to watch that to make sure that it's not going through and going to cross back below. But you can actually set that up, and that's a real cool thing. I use that quite often, especially with futures, because you can buy, 1 or 2 contracts and just kind of let that run typically. Extended hours is obviously a lot more volatile. What I have set up on my screen right now is not extended. With extended, you are going to be in and out a lot more, even with futures. I'm sure many of you guys remember a couple days ago when futures came down, what was it, 200 points, 400 points, whatever it was, and then bounced back up. So it is something that if you had extended hours, you would have been chopped up. If you did not have extended hours on there, you would have just held, and then obviously the next morning you would have been fine. But obviously that is a much bigger risk. But doing this study order condition is a great thing if any of you guys are futures traders, or if you just want to buy stocks. Now you can do this also with options, but then you're going to be doing a market order with that, and you want to be kind of more careful with that with options, especially if there's a spread on that or depending on what you're actually trading. So we're going to cancel that out because I don't want to do that, but just wanted to show that to you. So we've got the 15, the 50, the 200. Now, another thing that I put on here is Darvis Box. There's a book called How I Made $2 Million in Stock Market by Nicholas Darvis. It's an awesome book. I recommend everybody to read it. If you guys need any other book recommendations, let me know. I have a whole bunch of them that I read all the time. But How I Made $2 million in the Stock Market by Nicholas Darvis. And what he says in this book is the way that he made his money is by buying momentum. So when a stock broke out of a if the stock broke out of a resistance, he would buy. And if it broke out of a second resistance, he would buy again. And when it broke through that first resistance back down is when he would sell. So he would actually just follow the trend. So Thinkorswim does have their own Darvis box. I'm going to show you theirs. So this is the Thinkorswim one. I don't like this one. So this is not what I use. I had another one made, and I will share all these with you guys on this YouTube channel, so you guys can use all these indicators. Again, this is the Thinkorswim one, but you can see, the green obviously is the resistance and the red is the support. So when it passes the green, you're supposed to buy. When it passes through the red, you're supposed to sell. I'm going to show you the one that I currently use. So this is the one that I use. So when it passes through this resistance, you would have bought. You can see that it actually set up another little channel, and then you would have bought again. So what you would have done, so say it passes through here, you buy on October 28th at 30.33, and it goes through, and it does not close below that original support. So you would not have sold there, but you would have actually bought more as it created the second channel here. And then you would have kept buying more. So at this point, once you bought that second one, you would have closed if it had it passed below the 30.66 area. So you're just following this support and resistance. So as it breaks out, you buy. As it breaks down, you sell. And we are in the daily, and you can see how it works also on the weekly here as well. So here's the weekly. You would have bought, you actually would have sold here. So you actually would have missed this entire down move by doing this. You would have taken probably a little loss on this day, but you would have missed that whole down move, and then you would have bought back in right here. And it followed that up, and kept moving through that. So it's another really cool thing, especially with moving averages. Is just another way for you to watch the market and see, where the momentum is, and it's all automated, which is really nice. Another one I use, and again, I will share all of these with you. Let me go back down here to the daily. For volume, I use a buy-sell volume. So what this indicator does is this is actually telling me the average volume, which is this line that's going through. That is the average volume of the ES futures. When it's above, obviously you want to be buying. When it's below, you want to be not necessarily selling. If it's above and you have a current buy sell profitable, or in the green, you want to be buying. If it's above and it's red, you want to be selling. But so this is actually telling me what the percentages of current buyers compared to current sellers. Somebody shared this with me, and I don't remember where they got it from, but I'll share it with you guys. I don't think this is proprietary at all, but I will go ahead and share that as well, just so you guys can have access to that. Another thing I love to use is a Ttm Squeeze. Now, Ttm Squeeze, we need to do a little editing on it. So Ttm Squeeze is actually showing you basically price accumulation of when price is building, or when it's building up or building below. Okay, so I'll pull this up so you can see how this is set up. So this is actually showing a squeeze, which can fire either way. You can see here it kind of fired down, and you can see as it's building back up that yellow. So I do change that to make it a little bit easier. So negative down red, negative and up. I like to do a little bit pink, positive and down, and this one a little bit darker. All right, so now you can really see the build in it. So what this Ttm Squeeze does is this showing, trying to show a certain price movement. So you can see here as it's dark red, moving into pink, and gets into more of a darker green, which means that the stock price is moving up. You're getting more buyers and sellers in there. And you can see that actually does coincide with the buy volume. So you can kind of see how that all acts. So you can see as it gets a little bit tighter, there's a little bit more selling, buying, and as it moves up, and then more selling coming in as it's moving down. Ttm Squeeze is a great thing. It is included also with Thinkorswim. The other one that is included with Thinkorswim that I really, really like is the Ttm Trend. And the Ttm Trend, what this is doing is it's actually showing you the price trend of the actual candles. So trend down, trend up. I want this to be green. So you just go to globals, trend up, apply that, and now you can see how my actual stock candles are. So you can see we have been in a completely uptrend market. So on this TTM trend, these green but filled in, these are actually what you would see as a red day on a normal candle. But this is showing that there's still a uptrend, even though that the day ended red. And then you can see here, this is red, so this was starting a downtrend, but we had more buying, so that's why it's not filled in. More buying, it's not filled in. We did have more selling here, but you had a nice little hammer candle. So it did start that green trend up again. So you can see that even on these red days, this is kind of keeping you from getting faked out, selling position maybe. This is kind of helping out with that. So so you have a TTM Squeeze, buy sell volume. So this is the basis of my trading. I mean, this is basically what I use to figure out my trading. Now, the way that I use these, well, first of all, if anybody has any questions on what we just set up, I know I just kind of went through that fairly quick, but let me know and I can go over anything. Just as a recap, I have my foundation, which is the 15 EMA, 50 SMA. I use the Darvis box, which shows support and resistance. You would buy on a breakout and sell on a breakdown. I have my buy sell volume, so I can see the percentage of buyers compared to percentage of sellers. And I have my TTM Squeeze, which is showing me actually price direction. Okay, so this is showing me a certain type of squeeze, a direction that this is trying to go. Now I do use a lot more. Sometimes I do use the Ichimoku cloud. Again, I don't really know how to pronounce that, to be honest, but what that does is actually just shows you a quick momentum. For the strategy to buy and sell on the cross, what is the floating PL for this strategy, the one that TOS provides? Are you talking about the 15 EMA, 50 SMA? The 15 EMA, 50 SMA, you're talking about like the PL percentage wise? I would have to back test that. I don't know off the top of my head what the PL percentage is on that. So I have it set up to actually show me a 26% buy. Now on this one, this isn't going to actually, that's never going to show that. Let me see if I can pull one up. Let me see what Apple shows. So here you go. So on Apple, this would have actually had you buy at 197.35. And then your target would have hit at 255.93. So that's when it actually would have had you get out of this trade. So I don't know what the percentage is of winners versus losers. I could back test that and let you guys know. But I've used this for almost 15 years, and I mean it has been the foundation, and it's what I trust more than almost any other indicator at this point. But you can see, I mean, I can pull. I I can pull almost anything up. I mean, what's one that just fell? So, I mean, right here, here's a really good example. So on Alta, this would have actually got you out before that drop. So on Alta, you would have exited at 340.95, been stopped out at 331.98 if you didn't exit out yourself, and that would have got you out before that earnings drop. So, like I said, I could back test this, but I really don't know. But you can see here also in Alta, you can get chopped up just using this. Entry at 238, exit at 237. It wouldn't have been a bad one. Now, had you been trading calls, you would have probably lost almost 100% unless you were very far dated. If you're trading just a stock there, you would have been safe. And then obviously you would have been in right here again. So again, I can back test that and find out, but I don't know the actual profit percentage. All I know is that this is something that I've used for a long time, and I trust it. Is the squeeze a lagging indicator? Also, is effective in trading? So the squeeze is not a lagging indicator. The squeeze is actually a real-time indicator. It will change by the day, by the minute, by the 5 minute. So the ES is active right now. So market is closed. Futures market is open. So ES, MES, NQ, they're all open to trade today. But you can see the squeeze is active. So the squeeze is active based on the price distribution. So right now, this is actually saying that there should be a reversal coming. Again, look at the volume. The volume is so low that I wouldn't trust any of these indicators right now. But if you look at it during the market, when the market's open and you have more people buying and selling, you should be able to see this. But this is showing you had your down move. So up, started moving down. So you had all these red. So you would have, obviously not been in. This is saying that you could start buying now based on the 5 minute candle. If you're just looking at this Ttm squeeze. So it's something that you can watch on any level chart. So on the 30-minute chart, you have a downtrend in the squeeze. You'd have to see if that's reversing. It's starting to reverse on the 5 minute. But again, with volume so low today, I wouldn't even worry about it. I think it was about 3 a.m. we started getting a lot of activity, and you can just see the volume is dead today. So, 86,000 total contracts traded. It's just, 6,000 total contracts traded. Look at that, the average volume compared to that. So I wouldn't trust that right now, but set that up on your Thinkorswim and you can kind of take a look at that. So we'll go back to the day. So how do you use these indicators to find trades? In Thinkorswim, now I have hundreds of scanners set up. Again, this is just depending on the type of market that we're in, depending on what I'm looking for. Let's say you just want to find the 15 EMA or crossing the 50 SMA. So I do have that. So I have that within 2 bars. I don't know if we're going to find anything because the market's closed. Oh yeah, okay, so we do. So what you would do, and I'll take this off or we'll add another one here. So you go add filter, study. You're going to go to custom. We'll get rid of the ADX crossover. You don't need that, so you just delete that. Add condition. Again, study. And just like when we were talking about setting up a automated trade, moving average crossover. And again, here's the 15, 50, and I use the exponential. simple cross above is true within 1 or 2 bars. So if it's a day before, that's typically fine. A lot of times if that 15 cross will happen, you will get a little bit of profit taking on the next day, and that's sometimes a good buying opportunity for you. You'll go save, okay, and then there you go. So you're set up for that. So I just ran that. So within the last 2 days, these are all the stocks that actually had that 15 EMA cross the 50 SMA. So see if I can get you in. Here you go, Costco. So Costco came up on that. We're in the day. And there you go. So Costco came up with my scanner. That gave me that cross. That is my first buying indicator. So as long as Costco has crossed that 1550 on the daily, I would consider my first step in buying Costco. So, and you can actually see here also when it crossed the same exact day, it broke out of that Darvas box that we talked about before. So we broke out of this first one, broke out of this first Darvas box. It came up, hit the resistance, came down a little bit, bounce, broke through on the same exact day that cross happened. So this would be a pretty big buy opportunity for us. Now, how would you use that to find options? So first thing you want to look at is earnings. I don't ever want to hold options over earnings because of Volatility Crush. So Volatility Crush is after options. There's a high volatility in options prior to earnings because, as everybody knows, nobody can predict the way that options move. So a lot of people try to guess, and a lot of people get eaten up. You can make a lot of money, but even sometimes if you guess right because of the Volatility Crush, you can lose. I don't ever recommend buying options over earnings. There are strategies that you can do options on by selling options over earnings because you do take advantage of that Volatility Crush. But again, you need to make sure that you're fully protected with that because you can have a $10 predicted move and they can come out with really good earnings or really bad earnings, and then that stock can move $20. And if you have unlimited risk, then you can be in a margin call and be in a lot of trouble. And I've seen that happen to a lot of people. So you have to be very, very careful with that. So first things I would look at, because we are in earnings season, is the earnings. So we have earnings after market close on March 5th. So I'm going to go to trade, take a look at my options here. So you can actually see here in Thinkorswim, they have what's called today's option statistics. Now this obviously would have been from Friday because the market's closed today, but you can see all the calls and all the puts that have been bought that day. You can see the delta between them, 0 to 20, 21 to 40, 41 to 60, and so on. You can see that there obviously was a much more bullish day than on Costco than it was bearish. You can also see the Sizzle Index, and the Sizzle Index is the difference between the average volume of calls and the average volume of puts. And if that is something, so a call Sizzle Index is 0.93, average is 1.0, so you can see neither one of these were over. So there's no real big bets on Costco. This is just an average day for Costco. So you wouldn't have really any unusual option type trades that would have happened with Costco on this day. But to see the volatility, and obviously the volatility in Costco is fairly low, you can see. We have the March 5th earnings. Yeah, 14.27% is the January 24th. And March 20th, you have 18.62. So that is the option that I would want to buy. The highest volatility closest to the date. Again, this is just for this Costco one. This does change quite often. But for this Costco, if I were to trade this, you're predicting an 18 plus or minus $18 move on Costco. So we have the March 20th on the highest volatility closest to the earnings is what I would trade. So I would take these March 20th. And what I would do, I would look for probably a 50 to 75 delta. Now the delta is the amount that the stock or that the option price is going to move per $1. So if Costco moves up $1 and I have a 60 delta, I have these March 20th $300 calls, a 60 delta. That means that this price of the contract is going to move up $60 per dollar. So, and obviously that does change as the price moves up and everything. But I would look probably for anywhere between 50 and 75 delta. So at this point, you could be at the money. I would trade these 300 calls through a 468. They are 11, whatever the mid was, 11.55 was the mid at close on Friday. And I would keep those and with my stop at 301.90. So if Costco comes back down, right here, 301.90. That's when I would stop out on that. So at a 60 delta, you'd be looking probably 304. So you'd be looking at a $250 loss with unlimited upside. Then what you would do if you're following this exact rule, you have your other resistance up here around 307. If Costco were to break out, you would add to that by doing the next at the money. So you would be then buying the 305 or the 310. And you would add to that as the price of Costco goes up. So let's find another example. How about Home Depot? Because that actually came up on quite a lot of different scans for me on Friday. So first I want to get rid of All right, so Home Depot came up in quite a lot of different scans for me last week. So I had my 1550 SMA or EMA SMA cross. I'm right in the middle of a range, so that is why I did not buy it. Now you could have used that as a buy, and then you would use this as another buy. But we have earnings on February 25th, so we have quite a lot of time. So again, here you go is your today's option statistics. More calls and puts. Your call Sizzle Index is 1.25. Your put Sizzle Index is 1.18. So calls are a little bit higher, but again, not a crazy amount to even worry yourself with. You have the February 25th earnings. So I would take your 19.81% volatility, expecting a $12 move plus or minus. And your 50 to 75. So 230. So these are pretty overpriced. I wouldn't necessarily buy Home Depot options, at least going out into these February ones. They do seem fairly overpriced to me. Seeing that buy, this is a $230 strike. Price is at $231.91. You're at 6.85 to 7.4. So you're looking about 2.7 to 2.8. I'm sorry, $237 to $238 before you're at break even. That's if Home Depot flattens out and kind of accumulates for a little bit and doesn't move up. You're not going to make profit on this unless it's at 238. So want to be careful with that, but that is a way you can see it is in a nice uptrend. So obviously that's why the volatility has increased a little bit. So it's expecting, options are expecting Home Depot to at least get back up. And here you go, 237 to 240 is where the top is. So the options are expecting that move to happen. So if that move happens fast, those options will be worth a lot of money. If that doesn't happen that fast, then obviously you're going to lose a lot of decay on these. So you have 34%, and it looks like more people, 34% of people on Friday are expecting a 21 to 40 delta, which means they're expecting a big move to happen. I mean, I don't hate the idea, but it's not the best setup. So there's that setup, that scanner. Another one. So here's one that actually is looking for a break of the Darvis box and the 1550. Oh, I'm on the 30-minute. I want to change these today. So there's nothing here that I would have traded based on this, but we'll take a look at FHN. And you can see here on that same day, you had the break, the 1550 cross, and a breakout of that resistance. So that does look like, well, that's because of earnings. That does look like a long trade that you would sell and break down below 1686. And there you go, look at that. A lot of calls, a little bit higher volatility. You could take the February because earnings are done and look at all that volume right there on the $17 calls at 60 cents. So those are cheap. So that means option prices are expecting a break of the 1745 resistance. You break that 1745 resistance, you have your next major resistance at 1834. On those options, you have a 60 delta. So you're talking, you can buy these at 55 cents or $550 per 10 contracts. You're talking a $600 gain or over 100% gain if that gets back to this next major resistance of $18.33, a dollar move. And that's the power of options. That's why a lot of people trade options. And that breaks, you go through that. You have a move up to 2084, and you're talking probably a 300-400% gain on FHN. Now, I'm not saying that's going to happen. Obviously, this is not a real volatile stock. So that would take a big move, and it's definitely probably not going to happen in February. So that's not a trade recommendation. I'm just trying to kind of show you how some of these work. So nothing, there you go, okay. So this is also using that with a increased volume. And again, here's Costco again. So Peloton, take a look at Peloton. Now I did get into Peloton on Friday. I did a put credit spread on Peloton. And this is the trade that I have in Peloton. So what I did on Friday, or was it Thursday or Friday? I bought the January 24th, I'm sorry, I sold the January 24th 31.50 puts and bought the 31 puts. Peloton's at 31.57. So if Peloton remains above 31.50 by Friday, I collect $250 on that trade and I keep it all. If Peloton drops below 31.50, I lose $250. So this is just a bet. This was a bet that Peloton was going to remain above 31.50. And I did that based on the cross. And it did break out, but you can see how it did break back down. So, you know, maybe a little bit riskier. I really need that to get over 32 to feel real comfortable. But overall, a 1-for-1 risk to reward, I thought it was worth taking. So this Analyze tab in Thinkorswim is awesome for spreads. This can really help you find good trades. So we'll do, because Costco's on there. So say you want to take a bet that Costco remains above 300. And I don't know. So Costco remaining above 300 by February 21st by selling the 300 put, buying your protection of the $295 put. You're collecting $118 and you're risking $382. And as long as Costco remains above $300, even if it's $300.01, you collect all that money and you keep it. So these put credit spreads are awesome, and you can see all of these in the Analyze tab. Another scan that Thinkorswim happens is the Spread Hacker. And the Spread Hacker will, I don't need that. I don't know if it's, okay, so Spread Hacker will actually show you all these different strategies: vertical, butterfly, iron condor, calendar, diagonal, double diagonal. So if you want to look at verticals, max profit of at least 20%. Now you kind of have to go through these and find the good trades. XLV is in a lot of these for some reason. So these options are going to be all screwed up because the market is closed. Let me see if I can find one. So here you go, on the XLV. Get rid of that one. I don't even know what the XLV price is right now. Let's take a look. So it's at 104. Broke through the resistance of 103.37. So that could be a buying opportunity if you're using support and resistance. This is taking a bet that by February 14th, XLV is going to remain above $99. Now, XLV is in a lot of these scans for whatever reason. XLV is the biotech ETF. And obviously, biotech and healthcare have been exploding lately. So you need to be very careful with that because of how much momentum's been going in these. These puts are obviously overpriced because people are betting that this is going to come back down. So you need to just keep all that in mind. Just because you see these on the scanner doesn't mean that these are great trades. But this is saying that this XLV is going to be over $99 by February 14th. You're collecting $17 per contract and you're risking $83. So about 20% profit on that. So, you want to sell 5 of them, you're collecting $85, you're risking $415. So, you're giving the market $415 and they're saying, well, we're going to pay you $85 if you're correct. As a, looking at that as finances, 20% in a month, there are people who would kill for that in their account. But again, you do need to make sure that you're not getting caught in these because of how aggressive healthcare and biotech has been. Eventually that is going to come back down. Now I don't know when it's going to come back down, and it seems to be following the market, and people are obviously trying to catch the top in the market, and it's near impossible to do that. But I don't hate this trade. Look at $99 all the way down here. You're going to break through 2 supports. You have one support at basically $100 and another support at $100.50. So you have 2 very close supports there. That's actually not a bad trade. So you can go through all of these and see what Thinkorswim has set up for you. You can see what you can set up your own scanners, and I can help any of you guys with setting all this up. Ttm Squeeze, we can actually use a Ttm Squeeze to find squeezes that are happening. ISRG is one that I trade quite often. AMGN I trade often. Caterpillar. So here you go. So on the Ttm Squeeze, it's actually showing, this accumulation right here. So there's not much volatility in it. There's money coming in, money coming out. The Ttm Squeeze is just showing that it's building. Now, the build can happen in either direction. So, it can fire in either direction. So just because a Ttm Squeeze is going doesn't mean it's going to be going up. That's why you have to use the other indicators to kind of help you with that. The 1550 strategy in the description. I'm not selling anything. What do you mean? The 1550, you're just taking a 15 exponential moving average and the 50 simple moving average. You're just taking, go to studies, edit studies. Oh, so that one, that's a proprietary one. I had somebody make that for me, and I don't know if I can share the one that actually signals that. I have to talk to him to see if I can share that with you guys. I'm not selling it. I'm not selling anything. That's something that he made for me. Yeah. Yeah, if he says I can go ahead and share that, I'll put it in here and I'll update everybody on that. But I want to talk to him because that was made specifically for us. All right, so next thing I want to go over. I'm sorry, Monica, I missed your question. Do you use multi-time frames to analyze your trades as well? Yes, I do. So again, here's my flexible grid. This is what I typically use. I'm going to put this on ES because it's open. And ES again is S&P 500 futures, and futures markets are open today. So this is typically what I have set up for finding an entry and exit. I won't enter a trade until all of these are confirmed. So for going long, I wouldn't be long ES because it is an exit. Now this is on the extended, but on these ones up here, the 15 and the 10. So the 10 did just cross over. The 15 has not crossed yet. So I would not enter ES until I get this cross back above on the 15. So I do want multiple time frames to show me profit. I'm sorry, show me the entry points on these trades. So what I would probably look at if I were to be buying or looking at futures right now is I would probably be looking at a break here of the 33.2350 area. And that's when I would start nibbling and buying into futures. So I would create alert. Yes, the stock I'm on, mark at or above 33.2375. That's fine. I would create that and I would wait for that alert to trigger before I would consider buying into any of these, because that's breaking the intraday resistance and getting very, very close to this cross right here. So that's just, I do use multiple time frames on this. Sorry, I missed your question earlier. Now, while we have this up here, somebody asked me about a couple different indicators as well, being the tick, skew, and the ADD. I do use these every single day. Now, the tick is basically the overall market optimism. More or less, it's basically stocks trading positively or negatively. Now, it is only accurate up to the minute, so it does change very quick. I use mine right here. So you put the dollar symbol, TICK. I use mine on the 5 minute. Obviously, 100 being the normal. When it's below 100, that means people are selling. When it's above 100, that means people are buying. And again, this does change very quickly. So you can't just follow the tick, but it'll just give you an idea of what the market's doing. What indicator is that? The yellow channel on the chart, those are the Darvis boxes, and I can share that. Yeah, I have to remember how to share. Okay, so I did just share the link for those Darvis box, the support and resistance boxes. Again, those were created by Nicholas Darvis, and if you have not read the book, How I Made $2 Million in the Stock Market, I highly recommend you guys pick that up and read that. It's a really, really good book. So again, the tick is a indicator that continues throughout the day. It happens very quick, so you can't follow that, but it'll just give you an idea of what the market's doing. The skew is, and again, this is right here, an SKEW. The skew is the measure of potential risk. How far off is the market, or if you're looking at a it is in the public comments. I saved that in the public comments. I'll post it here too. The skew is the measure of potential risk. How far off is the market from normal distribution? You can use this for any basic stock. $100 is the normal. $150 means high risk. So we are 135, so right between normal and high risk. So the skew is basically saying that the market is not in a high risk environment. We have a lot of people saying that we're at a top, the market's going to crash, it's going to crash. Indicators aren't telling us that yet. So if you're a technical trader, that's what you're following. And right now, it's not saying that we're at a market top. So it's just there's a lot of different things that people can look at to base their decisions on. It's either fear. What's the VIX doing? The fear and greed indicator. VIX is extremely low. Again, that means there's no fear. People say, when the VIX is this low, that's when you should be fearful, because there's so much optimism out there that if something were to happen, the market's going to crash. But right now, the skew and the ADD, the accumulation distribution, is not really telling us that. And that's the other one, is the ADD, which is right here. So you do $ADD. That is accumulation versus distribution. And that's basically the difference between the stock price and the volume flow. Basically, like raising stocks and the ADD is falling. So right now we had that on Friday, price moving up, ADD fell. There might not be enough support for that price rise with the volume. So, but again, you have to be careful with that, because that was a Friday before a long weekend. So there is going to be less volume on that day. With ES right now, it's down 2 points, but again, very low volume today. So you couldn't really, base your decision off of this again. But this is just another indicator showing, what the market could be doing. On Thursday, the ADD was red. It did rise from Wednesday. And it did end red. So that could have shown you on Friday that you were going to have that market drop. Or you might see a market drop. But overall, the skew hasn't changed. The ticks remain positive. Ticks are remaining strong. It's just there's not a whole lot out there that's showing me that the market's going to crash. It is very overextended. I agree with that completely. But until the market tells me that we're going to have a crash, I'm going to keep trading the market the way that it is. So overall, that's how I set things up. That's what I look at. If you guys have any questions, let me know. This will be recorded, so you can come look through this again. And I will let me post this buy sell volume in here as well. So if you guys want to use that. Okay, so there's the buy-sell volume. If you guys have any questions, you can always reach out to me through direct message, email, whatever's the easiest for you guys. Always around to help you. And if you want to go over charts, if you want to go over anything, we can do that real quick. Or like I said, this is going to be recorded. You can go back and watch it and see how it's all set up. All right, no problem. Well, all right, you guys have a good day. Enjoy your time off if you got it today. And again, like I said, if you guys have any questions, I'm always available to help out. All right, thanks, guys.